Hello and welcome to KPMG's Doing the Deal series, where we share insights on the deal-making landscape in West Africa by talking to the investors and entrepreneurs behind the deals in the region. My name is Dolapo Adeosun. I'm a partner in KPMG's Deal Advisory Practice, and I'm the host for today. Joining me on this episode is Daniel Adeoye, partner and head of investments at Verod Capital. Hi, Daniel.
Hi, Dolapo.
Welcome, and thank you very much for joining me today.
Thank you for having me.
So maybe we should just start with you sharing a little more information with us about yourself, about your firm, Verod Capital, and its role in the deal-making landscape in the region.
Verod was formed in 2008 by two young entrepreneurs who saw the opportunity in Nigeria and West Africa and decided to take the plunge and start making and doing deals. Our first portfolio, where combined it was about $50 million, but we couldn't raise a traditional fund because nobody knew us. So we sort of wanted to do like a POC first and then go out and raise a proper fund. So in that fund, we deployed capital across about 7 opportunities. And we did some really interesting things, from manufacturing to real estate to business services to some tech companies as well. So we took all those lessons we learned from Portfolio 1 and then went on the road to say, look, everyone, we have proven this concept. It has worked. Please back us for our first institutional fund. And that was done in 2014, where we raised $114 million, deployed capital across 10 opportunities. We spent all that cash and went on the road again in 2019 and raised our second fund, which was about $200 million.
Thank you very much for that. So let's delve right into it. My very first question is what everyone's pretty much talking about. And I can imagine that it will be more so for deal makers and investors, the challenging macroeconomic environment in Nigeria and other key markets in the region, Ghana, for example. Has that impacted your investment strategy and, just your process in general?
Okay, so at Verod, we do a lot of thinking. I mean, you have to do a lot of thinking in this market. And everyone understands that we are in a VUCA environment. It goes without saying. And we always try and answer the question, how do we build armor for the VUCA, right? So for us, the armor essentially is an acronym for acquisitions, restructuring, monitoring, operations, and returns. Mm-hmm. So when we say acquisitions, what we mean by that is, how do we let the market know the kind of deals Verod likes to do? So essentially, the sectors that we like, the kind of sponsors we want to back, the kind of management teams we like, how much we want to pay, what we wouldn't do. So if the market knows all this, they sort of know the kind of deals we would like to do. When we say R, that's the restructuring. It's essentially like during the due diligence phase, you're sitting down with the management team to say, look, these are the 5 critical things we need to do if we go ahead with this investment. So things we find, again, thankful to KPMG during the diligence, where we figure out things like your IT is off, or there's a cultural issue here, or from the financial side, there are too many gaps. We sit down together and come up with a roadmap, right? And if we do the deal, then the MOR kicks in, where the monitoring and operations, because honestly, everything now in our continent, in our market is about value creation, right? So the plan we figured out in restructuring, we start to execute in the M&O, which is the monitoring and operations. And then the R, which is, we like to say something at Verod, which is always think with the end in mind. Mm-hmm. Again, because of the VUCA environment. So we plan our exits from day one, where, for instance, I can go to a larger PE firm to say, look, hey, I just acquired this company. If I want to sell it in 5 years' time, how large should it be? They tell you very clearly, Daniel, if you want us to buy this thing, or Verod, if you want us to buy this thing, this is how it has to look like.
Sure.
If we hit this target, hit this critical milestone or transition point, we can sell this business. And we've done that several times, and it has worked for us. So that's how I think we like to think about deals from an end-to-end point of view. And honestly, it has served us well.
Sure, thank you. And you alluded to it. What's very important is the right target, making sure you're investing in what will serve you well in the long run in terms of your principal objective of returning money. On that note, what would you say are the key considerations with selecting a suitable target for investment?
So I think it was Warren Buffett that said something once, which has actually stuck with us, where he said, like, when an industry with a bad reputation meets a great management team, the industry with a bad reputation always wins. Mm-hmm. So I think the first thing for us is we get comfortable with the sector, right? What has the trend been over the last 10 years? How has this sector developed in other markets that are similar to ours? What is the local nuance? And if we are comfortable with the market, if we are comfortable with the operators in that sector, then we like the sector.
Okay.
Once we say we like the sector, then we start looking for management teams we can work with. There are also times where we like a sector, right? But unfortunately, because of how the core of the sector is, we can't operate there. So for instance, in the telecom space,
sure,
I'm not going to go buy a telecom license, right? I'm not going to compete with MTN. Mm-hmm. So we ask the question, how do we go 2-3 derivatives backwards to see how we like this sector, but we can't operate with the big players, but can we provide a service for them,
sure,
right? So in the telecom space, I'm sure you'll have heard this over the last couple of weeks, where we invested in the tower business. Mm-hmm. So without tower businesses, MTN cannot operate. So that's how we sort of play around sectors, do a deep dive and find the key players.
On the flip side of that is, I guess also that business owners and entrepreneurs are also looking for the right partner beyond capital, and you alluded
Correct.
to that. What is your Verod's value creation strategy? What do you bring to the table with respect to the partners that you're going into business with in addition to capital?
Right. I mean, for us at Verod, VAC, value creation, is everything. Increasingly, deals are too expensive. So in the past, where you buy cheap, you pay a 5x multiple and you sell it at 10x, you do arbitrage, those days are gone. There's the FX crisis. Essentially, if there's a 60% devaluation, essentially you're saying the company has to grow by 120% to get out of that madness. Sure. So for us now, the core focus of Verod, honestly, right now is value creation. Mm-hmm. And the value creation honestly starts right from when we are looking at the deal to say, how can we move this company from, say, 50 stores to 500 stores? Mm-hmm. And the first thing we try and do, even before we speak to the owner of the business, is we go find out everything about this business. So we do this a lot, where we show sponsors what is possible, right? This is the vision we have for your company. Allow us dream with you. That does wonders all the time, right? And then when we sell that dream, we also have to sell the fact that we can make that dream work. So I'm not just saying 700 stores, I'm saying we can get to 700 stores and we've already identified 50. And I've only been looking at this for 2 months. Mm-hmm. That's what I can bring, right? There are the other nice to haves where there's governance. You have a board, you have committees that support the business. You try and put in place a great CFO. Sometimes you wouldn't even change the CFOs or members of the management team. Sometimes you just need upskilling, right? Where, look, there's a better way of doing this, and we show them global best practice. So a lot of those things are commoditized, but because we understand the nuance of our market, right? We know exactly what is required, and we do this a lot as well, where we say, look, do a reference check on us, right? Go speak to other sponsors that Verod has invested in the past, and hopefully they give us glowing reviews, and that gets them even more comfortable. What else do we do? And of course, there's a side of impact, which is actually critical, especially in our market, where typically we'll do the ESG due diligence, where we also do an impact assessment. We also do a sustainability assessment for them, and so many other things where we show them, and then we actually start publishing on an annual basis. Like, look, you used to be here, and this is where you are now. That also does wonders, where sponsors start thinking about their impact to the community and the society, where you're impacting society, but you don't record, you don't mark it down. But now you're being intentional about it, and you want to grow that impact, because then you realize, hey, there's so much we can do. So that's some of the ways where we apply value creation to help our businesses.
So maybe just going back to the deal execution phase. Mm-hmm. apart from, sort of the volatility that you'll have to factor into your model, and I don't know how you're modeling this, how you're modeling the volatility these days. What are the sort of other major challenges that you've encountered or that you typically will encounter in closing out your deals in this region?
So I think the first thing is depending on the kind of business. So if it's a business that is owned by a PE firm, it's usually easier and faster because they've been there before, they've done it before. But even at that, there are times where the currency issue comes up, right? There's also the point around by the time you're starting a deal, during the due diligence phase, the sponsor will say, look, I want to see it close in a month. Oh yeah, I can move in a month, no problem. You have all your documents. They always say they have everything. And then KPMG sends an IRL. Nothing is available. So DD goes from
1 month
to 3-4 months sometimes. And that just drags everything. Yeah. Then you get to the actual agreement, right? As a PE firm, you want to have certain things like drag rights. You want to have certain controls. And then the sponsor sees this, you want to steal my business? Like, no, it's a standard term. And it takes like 3 weeks explaining to him. He'll say, I have to go speak to someone else, get a second opinion. And that will just drag things even further. Usually what helps is there's a level of trust already, and that helps, but some things just jump at them. Of course, then there are the CPs that sometimes just take forever to sort out. Then I think there's also the fatigue sometimes. Management is tired, this thing's finally done, when ideally you're supposed to be running right afterwards. So you need to find a way of keeping them motivated. So those are some of the frustrations, but it's a lot. You might be smack in the middle of a deal, a new regulation comes in and that just changes everything. But yeah, I mean, it's all fun and games. Being here long enough, understand how to manage VUCA. But yeah, those are some of the frustrations we face.
So despite the volatility in, the macro conditions in the region, do you still see any areas that present, attractive investment opportunities for investors such as yourself?
Yeah, sure, Dolapo. All the time. I think we don't give the Nigerian economy or the Ghanaian economy enough kudos. Those economies are so resilient. It's unbelievable how the typical African consumer just finds a way, or the companies just find a way. I think for us, the fact that there is a massive devaluation means there are tons of opportunities, because essentially people that are hooked on imports have to start looking for alternatives. And those alternatives are across the entire value chain, from semi-processed to raw materials to you name it, even services. We're also seeing a lot of lifestyle changes as well amongst the Nigerian population and demographics, where because of social media, after COVID, people want to stay healthy, for instance. Now you're seeing fitness is now a thing. We're also seeing a situation whereby people are asking, rather than buy a new phone, maybe I should just refurbish my phone. So you ask yourself, who is the #1 phone refurbisher in Nigeria? You don't exactly have a formal process of refurbishing phones, and we have 100 million cell lines, right? So there are a lot of opportunities across. For almost every sector you check, we're still coming from a low base, right? And when you check the value chain, there's so much that can be done, right, to replace things that are imported, or as consumer lifestyle change, or even the demographics, right? The number of people that are 60 and above in Nigeria continues to increase. That catchment has certain needs that we can't still fulfill in Nigeria. I think the Nigerian entrepreneur would always find new ways, and I think because of the market shifts, opportunities will continue to pop up for us, and Verod will be there with our team to continue to take advantage of those opportunities across the region.
That's actually very good to hear that you still see opportunities, because we need private capital in Africa to drive growth.
Correct.
And your position just aligns with our views that this region still presents opportunities for superior risk-adjusted returns if you have the right approach to investing.
Correct.
Okay, so next question. So what are the areas that you have seen to be areas of value leakages in the deal process based on your experience?
Yeah, sure, Dolapo. I think first thing, again, I just want to commend Nigerian entrepreneurs and management teams. You understand how tough the market is, and you just want to move. What's going on the next day? How do I survive the next day after that? Mm-hmm. In terms of value leakages, there are a lot. I mean, you do the diligence. You see very little things around not paying your pensions, not remitting your VAT, for instance. Yes, that governance and compliance is always lacking. You also see things where when you started the business, you knew we're just trying to get by, mm-hmm. right? And there were things you wouldn't necessarily not do. But as you've grown and scaled, right, always learn, like you can't do things when you were still a mom and pop shop, right? Just ask around. You would realize like, no, I can't do this anymore. I need to have proper systems in place. Because you've seen situations whereby the margins are great, but then when you do the diligence, like, oh, Dolapo will tell me, Daniel, you have to hire a CFO, a CMO. By the time you add all those things in, I want to adjust the EBITDA.
Yeah.
Right? And it's also like, no, Daniel, you can't adjust, but I have to, right? Because once we invest, we have to make these changes. So, just always realize as your business grows, right, there are things you have to do as well with that growth. I think also a number of times, sponsors don't dream enough. You've gone from day by day to quarter by quarter to year by year. But to build truly transformational businesses, you're thinking 30 years out, right? Yeah. So it's always great when we find a dreamer, right? And I'm like, oh, this is going to be easy. So when we say we need to, I remember there was a sponsor we met and like he had one location and we're like, you need to open like 15. Like, I don't know, I just want to open 5, right? So not having to go through that vision hurdle is always a great thing, right? Mm-hmm. And if I want to value your business and you don't have the right vision, I'm going to put a discount on your multiple.
Absolutely.
Right? Or even when I'm modeling that business, I'm not going to be as aggressive as I should be. So that is also a source of value leakage. Just always be ready. Just simple things. Just ask your auditors, right? You'll be surprised what they would be able to tell you. Even if it's not them, there might be an advisory business within the group that can help you get investor ready.
Takes me to my next question about transaction advisors. And I know we've worked with you on quite a number of your deals. What areas do the transaction advisors sort of support you? Where do you get external help in your transactions? What value do you see transaction advisors bring? And what areas do you think they could contribute more?
Oh, super. I mean, we wouldn't be here without our transaction advisors. I think I'll give you your flowers because a lot of times we are so blindsided. I just want to close a deal, right? And what you and your team always do for us is, yes, you want to close a deal, but, right? So typically, we would do financial due diligence, we will do tax, we will do IT, we will do commercial, we will do legal, we will do ESG. Sometimes we'll do technical DD, we'll also do like background checks. And all the advisors really just help us with our blind sides, right? Because there's always this sunk cost fallacy. I just want to close a transaction. And there's so much I don't know. I am an investor. I am not a technical finance person. Sure. And we are humble enough to acknowledge that fact. And that is why we always come to you to help us. And you find so many things. Sometimes too many things. We're not complaining, we're thankful. Because sometimes you see the first report like, oh no. Because by the time all the adjustments we have to make, like, the sponsors are going to like,
how do you negotiate this?
Right. So we're extremely grateful and we remain humble. There's so much we don't know. Going through the ledgers, the trial balances, even with the IT audits, things that we thought are cool, because we only see things on the front end, but you always go to the back end, like go through the weeds. What is actually going on here? That's what our transactional advisors like KPMG do for us, and we're super grateful.
How do you see the deal making landscape developing in the next 2 to 3 years?
So I think deal activity would be a little bit subdued, right? But the moment there is any sense of stability with the FX, even if it stays at 1.5, but it stays there,
sure,
right? And we have an estimate, say on an annual basis, it devalues by 10%. It's fine, I can still plan. If that happens, people will just move in, right? Because now assets are a lot cheaper in Nigeria. So something that used to be $30 million is now $10 million. Like, who wouldn't want to buy that? But once there's stability, I think there's going to be a rush. So you're going to be pretty busy once that stability kicks in.
Well, we're looking forward to that, and we expect that with the reforms that the government is looking to put in, we should get some stability in the FX, which continues to be an issue for investments. Daniel, thank you for what has been a very engaging session. Any closing remarks that you'd like to make?
Thank you for having me, and I think, just to thank KPMG for doing this. Nigeria, West Africa can be tough. But there are deals to be made, sure. There is value to be made, there is impact to be made as well. And we continue to be excited at Verod, the entire team, and we continue to push hard to doing more deals and having more exits. So thank you again for having me.
Thank you very much. We look forward to supporting you as we continue to develop this market in the region.
Thank you very much.